We're getting questions from investors about how are GPs or owners refinancing out of bridge loans. I'm working on several bridge refinances right now, and bottom line up front, they're very difficult. If they're cash neutral, they're barely cash neutral. We're having trouble with occupancies across the market, trying to keep those occupancies high, more delinquency than normal. So it's very challenging. Some loans are, $500,000, $1 million short, and there's not enough money at the property level to come up with that capital. So they either have to do a capital call or extend the bridge loan. And the ones that are getting done are just barely coming through. But I'm seeing a lot of challenges in the market with bridge refinances.
Yeah, we got a little bit of relief in the 10-year, and so that helped pick up some proceeds for people. And, I think at the beginning of 25, 10-year ran up probably 4.7, 4.8.
Painful.
So that shook a couple people into saying, well, if I can get a 10-year that's 4.25, I'll take it, because I'm running out of time, and the Fed only has like 2 cuts baked in for this year, so they've got to make a move here pretty quick. And so if it takes $500,000, $1 million to sort of bridge that gap, but it gives you another 5 years on your runway, your pilot, you would love to have a 5-year runway versus a 5-month runway.
More runway the better.
More runway the better. It gives you a little bit more cushion out there as an investor. So people are definitely, they're going to the LPs for sure, but then also they're also trying to figure out, some people are having to go out and raise, you can call it pref equity, you can call it whatever you want to call it, whether internal or external, to bridge these gaps.
Yeah, I'm an investor in a deal, and they did that. It wasn't a capital call. They offered the initial investors an opportunity to invest in a fund that would get a return, but that fund was being used to do the refi. So right. I thought that was interesting. It wasn't a capital call, but investors had first choice if they wanted to invest in that fund. If not, they were going to get outside capital, kind of like a pref loan almost.
Yeah.
Just to get that refi done.
Yeah, and some of them, so most pref equity providers, they're going to want like probably a $4 to $5 million minimum check. And so it's almost too big for a lot of pref providers out there for them to underwrite the deal and do all this work, have their attorneys review it, and then to give you $1 million, right? And so it's a lot easier to just sort of raise that from retail investors on those deals. And so we've seen, I've probably gotten 5 emails in the last 2 weeks of guys who are having to do that just because, it's not one deal. They've got to do this on 4 or 5 deals. And so if it was one deal and it's $1 million, a lot of GP teams can sort of figure that out. But doing it on 5 deals is a lot.